most of the things we're talking about are only available to what the SEC defines as accredited investors. Accredited investor is that you have certain metrics. You either have more than $1 million of assets, not including your primary residence, or 200,000 single or 300,000 as a couple for income.
Just a gross income.
Yeah.
Correct.
Yeah.
Yep.
So that is the SEC's way of protecting the public. Now, I don't know about you, but $1 million doesn't buy what it used to. We a home in mid-90s, built it for $250,000, and now it's $1 million home. It's the same box, Rich. It's keeping you warm, keeping you dry, place to keep your stuff. Is it really worth $1 million? Well, I think it says more about inflation and what's happened to the devaluation of the dollar than anything else.
Yeah, and I think that the accreditation has been out there for a long time, and those rules have been out there for a long time, and I know that they're reviewing those rules to see if they need to be changed at all.
Yeah.
But I think the more people that we could offer alternative investments just to, either the non-accredited or the accredited is going to be a benefit to everybody just on their own allocation or their own portfolio.
I think so too. It really used to be just the area for the wealthy or ultra high net worth, but with the like I said earlier on, the democratizing of alternative investments, everybody should have the opportunity not to have their money volatile in the stock market.
Well, and really where this became in focus was about 15, 20 years ago, where you see these large universities, their endowments. So if you look at the Yale endowment, they publish basically their total returns at the end of the year and what they invest in.
Yeah.
And they were getting double-digit returns, and people were kind of scratching their heads saying, well, how did you do that through the stock and bond market? So
consistently.
And so they were actually doing a percentage of their investments into alternatives as well. So then it started to branch out from not just the endowments doing that, then it started to go down to family offices, and now we're all the way down to accredited investors now to really investing. And hence one of the reasons why the overall industry is up about 33% compared to last year, just because more people are allocating their overall portfolio, not just stocks and bonds, but a greater amount to alternatives, which protects you from the swing of the market.
Well, and that's one of the things we help clients with, is to familiarize them with alternatives. We'll talk a little bit about risk and due diligence, one of the areas where you've really helped protect a lot of our clients that way.